Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly historical support and demand area. From here, in fact, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, and at the moment the market is testing the same zone, has already started rejecting it to the upside. And in a situation like this, we could expect more bullish price action to be created away from this level. So from a monthly perspective, everything seems very bullish. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice how we have a market which at the moment shifted from creating lower lows and lower highs to now creating horizontal accumulation, and then from here creating the rejection to the upside. Now, in a situation like this, it means that we clearly had a shift from a weekly bearish market to now a weekly bullish market. Therefore, from here, we could expect more potential bullish continuation to be created. The problem is that if we drop down on the daily time frame, we have a market which clearly at the moment is stuck in a daily range. We have the bottom of the range here, and we have the top of the range here. Now, this means that essentially the market is range bound, and here we have this resistance zone that the market keeps rejecting, and here we have this support area that the market keeps rejecting. Now, until the market will remain in between this resistance and support, we can simply expect more horizontal price action to be created. At the same time, if the market from here will break below the support, things will not be interesting either, because in this specific case, we would have a situation in which the market is heading towards a retracement from a higher perspective, but in a bullish market, because as we have already identified, from a weekly perspective, we do have a bullish market with the creation of higher highs and higher lows. So also here, we could expect more bullish continuation. So this means that essentially the only situation in which things would be interesting is if we get a break above the high of the range, because if we get a break above the high of the range, at that point, the previous high of the range, which is now acting as resistance, after it is broken to the upside, it would become support. And after the break on the retest of the previous resistance turn support, that is where we would have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing. And let's check the data precisely for the pound. Now, what we can see here is that with the last reports, we went from having minus 27.7k net positions all the way up to having 30.9k net positions. So we had a strong increase of the net positions, with institutions shifting from a bearish positioning to a bullish positioning. In fact, we went from having more shorts than longs from an institutional perspective, with 80.5k shorts compared to only 52.7k longs, all the way up to now having 35.2k shorts compared to 66.2k longs. So institutions went from having more shorts than longs to now having more longs than shorts. So the completely opposite situation, with another 5,500 longs added with the last report and 4,600 shorts getting closed. So clearly institutions have been longing GBPUSD aggressively, and that is obviously what has pushed this uptrend to the upside. Therefore, We don't know if the market will stay in this range, break below, or break above, but the situation that would be interesting is a break above. So if we get a break above this level, at that point, what I would expect on the retest? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market on the retest of this level, at that point I would expect a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.